Good afternoon, everybody. Thank you for joining and participating specifically once the presentation is over to ask the questions. So we are going to start that seeing the current uncertainty in the market where from last almost 6 months we are heading nowhere and slowly and steadily drifting on the downward side. So specifically after this Iran-USA war, the thing and the volatility across the globe has increased too much sharply, whether it is equity market or commodities or precious metals, and the crude has also participated lately. So we are going to today discuss about from how the market looks for at least from next 2 quarters perspective, from global market perspective, where India as of now is placed, as well as in last 1.5 years, how the market has performed vis-a-vis the global market. Plus we will also discuss that the best sector or the best precious metals which has performed phenomenal in last 1.5 years, whether their rallies is going to continue or they are going to reverse. So what exactly is the scenario and how things looks from here, and where the money should be shifted or where the smart money is moving, that we are going to discuss over here today. So we are starting first with a quote that if you want to know about the future, you have to dig about the past. So the more you know about the past, the better you are prepared for the future. Of course, the future is not exactly as the past, but it will give you a glimpse that what it need to be done in order to survive and prosperous for an uncertain time period. So that is Theodore Roosevelt quote. Now I'm going to start with the Nifty Phoenix cycle. So basically over here at your screen you are seeing an quarterly charts, that is 3 months chart of Nifty 50. So post-COVID, that is right from 2020, we have seen a single-sided bull market where on a quarter-on-quarter basis, we have seen 6 quarter non-stop rally post-2020, that is after March. And after that, we have seen a consolidation of 6 quarter post-2023 after the consolidation period was specifically the Ukraine-Russia war. And after that, dust got settled down. We have once again seen the rally. And now after 2024, that is precisely after September 2024 to till time, we are once again into a consolidation mode. Now let me clarify you is that this single candle is representing a 3 months price action. So a 3 months price action is roughly around as of now near to 4,000 points in Nifty. Okay, so the first consolidation phase between January 26 and March 26, which you are seeing, the latest one, is nearly 2,000 points consolidation points. So don't get misguided by that small candles. Those price actions are of roughly near 2,000, 3,000 points. So in case if the market is going to repeat the same cycle, so this consolidation phase of 6th quarter is going to over by the month of March 2026. And if the market is going to repeat the same cycle, then post April, once again the market may resume its uptrend. Now second and one of the most important thing is that generally on an historical basis, post 1994, that is from where the NSE has gone online and from where the most reliable data which has been used by computer has been available. That is the computerized system has came into the stock market. Erstwhile there was a outcry system. So from there we have seen that majority of the bull market has topped into the month of anywhere between January and February, or you can say on a seasonality basis, the month of January to March, that is the first quarter of the calendar year, has usually remained negative, highly negative to negative for the equity market. So this is the quarterly chart which you are seeing, and you might be reviewing also in the next slide that how they have remained. So as of now, we are into an broadly speaking roughly around 5,000 points of consolidation into the current last 6 quarters which are going post September 2024. In September 2024, the Nifty has topped out in the zone of 26,270, and after that we are gyrating in the broadly range of 26,200 to 21,740. So which is an approximately coming to around 4,000 to 4,800 points of type of thing. Now during this consolidation, lot of sector changes has been done. Smart money has shifted into the sectors which have erstwhile in the rally has participated well or has been remained the darling of the entire bull run. Those sector has gone into oblivion and new sectors has emerged. So we are going to focus that once this consolidation phase is over, after that, what new sector could emerge, or rather than the existing sectors are going to extrapolate the trend and continually remain to outperform the market, how things are going to perform, that we are going to discuss. So broadly, this is the quarterly chart. Now coming to next quarter, this is the short description. What I have said is that rather than focusing on the short-term volatility, which we are witnessing from last 6 months, last 6 quarters, it is better that we focus on a larger picture. So the phase 1, which has started from the second quarter of 2020, that is from 8,000 point, we have non-stop moved into 17,947. So that was the first leg of the bull market post-COVID, where we have seen that the broader indices has moved up to 122 points. After that, another 6 quarters was in consolidation period, specifically from the end of 2021 to the first quarter of 2023, which was corrected from 18,000 to 15,000, so an approximate downside of 17 to 18%. So that was the period during where Russia-Ukraine war has started, and globally everything got hit during that specific period. And post 2023 first quarter, once again the renewed rally has started. So that range breakout has done. So 19,000 Nifty has came to the third quarter, that is September ending, 26,277, which was an approximate rally of 36%. So post September 2024, we are still into an 6-quarter consolidation phase, so 1.5 year consolidation phase. So earlier in Gujarati, people used to say that dod varasnu consolidation phase ho, matlab mota moti 6 quarter it usually consolidates, and after that it gradually moves on the higher end. But whether the last quarter still is near the upper end of the 52-week high area, so seeing this rally from an shorter term perspective, which we are probably guiding you that in next 3 to 6 months type of thing, before ending of this 6 months, there is a high probability that the market may come down up to 23,500 or even 21,800. And the major reason is that on the daily chart as well as on the weekly chart, the market has given and closed below its 200 days moving average, and post violations of 200 days moving average, the market is structurally gapped down in last 2 days with good amount of volume and extreme end of market break. What I mean by extreme end of market break means that roughly around 90% of the stocks has fallen in last 3 days. So with such a negative market breadth and violation of 200 days moving average, which itself indicates that immediate V-shaped recovery or V-shaped reversal seems to be least possible at this point of time. No doubt, due to the oversold condition of the market, maybe a temporary bounce may come in next couple of days, but that will be a relief really in the major downtrend. So there is a high probability, since that we have given a close on a weekly as well as on a daily basis below 200 days moving average, higher chances that before the end of this month, March, the market may drift down up to 23,500 to or even 21,800 type of level, so which is an approximately roughly near to more than 10%, you can say more than 10% from the current level. Now what we are projecting, that once this 2026 first quarter is over, that is by post March 2026, the market should consolidate once again for 1 or 2 quarters and should resume its uptrend. And in the lateral quarter, if this cycle is correct what we are projecting, then there is a high probability that till 2027 there is a good upside rally which is going to come into the market. So first a drift down up to 23,500 or even 21,800, and post them some amount of sideways type of picture, and then resumption of once again a new uptrend or a new bull market, you can see. So that is what the broader picture we are looking from next 1 month perspective as well as from next 1.5 year perspective. So how we can monetize this downfall in the immediate term, and how we can infuse our fund in an optimum manner so that we can juice out what we are projecting a bull market which is going to come. So that we will see in next coming slide. Now let us see from a short term as well as from a medium term perspective. When I am saying short term, that means it is 3 months, and when I am saying medium perspective, that is anywhere between 1 to 3 years. So this is the bigger picture vis-a-vis Nifty versus the global market. So over here you are seeing that from last 1 year we are grossly underperforming majority of the global market. So we have taken the one of the biggest 10 most liquid global market. In terms of market capitalization, we are at 4th number. First is US, first is US, that is Dow, second is China, third is Hang Seng, fourth is India, and fifth is FTSE, that is UK. After that comes Japan, and now the new entrant is KOSPI. Okay, so what we have seen is that from a 1 year perspective, KOSPI, that is South Korea index, and Nikkei has given a phenomenal rally. The KOSPI has almost near to given a 200% return on an index basis in last 1 year. So you can say that economy has almost near to double type of thing, more than double in fact. So the major rally was fueled by AI and semiconductor stocks over there. Over here we are nowhere in the picture for AI and semiconductor. So we haven't been a part of that particular rally over here. There are very few stocks which are providing a sideways or some hardware infrastructure type of thing to this semiconductor as well as artificial intelligence data center type of thing. So Nikkei as well as KOSPI has remained the biggest gainer. After that, Shanghai, Dow and all rest of the thing are there. But we have remained a gross underperformer. From a 3 years perspective, we are into the picture and we have performed better. Hopefully, we are going to remain next 3 years. We are going to remain in the top 5 category of this picture. So as of now, we are at the last. We are expecting that seeing the current scenario after this correction is over and once this dust gets settled out, there is a high probability that we may come in the top 5 picture from a gainer perspective for 1 to 3 years. So now coming down to the other slide, where how our rest of the indices, that is apart from Nifty 50, to be honest, Nifty 500, which as of now covers 80 to 90% of the free float market capitalization. So free float market capitalization, Nifty 500 is performed better than Nifty 50. And the major reason was that Bank Nifty has participated lately during this rally. And as you know that financial services are having 36% of the weightage in Nifty 50. So the broader index has gained on a 1 year as well as 3 year time frame. So Midcap 50 has outperformed. Midcap 150 has outperformed from a 1 year and 3 year perspective vis-a-vis rest of all the indices. So that we will see that why we are recommending Nifty 150 ETF in the current fall. So that if you have a perspective of 1 year or 3 year, that is one of a better index to be into it. And if you are an aggressive type of trader who generally buys in the dip or do SIP in ETF, that you can watch out Nifty small cap 100 also. That has also on a 3 year perspective has given the best return, and this you can check on a 20 years data also. So they have outperformed Nifty 50. So this is the broader indices picture. Now coming to the another slide, which is a statistical insight. Not necessary that same phenomena can be repeated, but generally this is on month analysis from a quarterly perspective. So what we have seen is that in our last you can say 18 years of period, that is post 2007-2008 subprime crisis, where the market has lost more than 60% in terms of Nifty 50 fall, and forget about the stocks, majority of the stocks has fallen even 90% during that period. So post that, what we have seen on a seasonality basis is that generally the month of April to June plus July to September has relatively remained one of the best months in terms of market return. Month of January to March, that is the first quarter of the calendar year, has always remained, or majority of the time has remained weakest, or majority of the bull market has topped or has made an high which hasn't been seen after for a longer period of time. That has happened during the month of January. So whether you pick up the Harshad Mehta Teji, that has topped out in the month of January, whether you pick up 2003 to 2008 market cap, that has also topped out in the month of January. After that, R Power IPO, whether you pick up the bull market of 1998 to 2001, that was .com, that was also topped out in the month of January. Subprime crisis 2007-2008 has also been topped out in the month of January 2008, and the current one which we have witnessed, we have seen a high of 26,300 has also been made during the month of January, plus the 12,500 high in the Nifty post-COVID fall was also in the month of January. So you have seen that majority of the fall has come in the month or in the quarter of January to March, and post that we have seen a good amount of consolidation plus positive type of return in the second quarter and third quarter. So the first quarter has remained weak case. The second and third quarter, the last 18 years data is showing has generated a positive return, while the fourth quarter has given a moderate gain, plus few of the quarters are there where they have remained volatile. So this is the seasonality analysis, and generally most of the time in our experience we have seen that this type of thing repeats itself in terms of price patterns. So over here we have given an average win, average loss, win percent, loss percent. You might be able to see in your table which I am representing. So if one has taken the bets, how much money has been made during those period of time. So we will try to time out the rally on a smaller frame rather than on quarterly. So we have given the support level of 23,500 and 21,800. So those are the good entry points. Okay. Now coming to sectorial outlook. So these are the sectors which we are going to discuss, that despite of the negative performance of the Nifty post 2024, where it has made a high, which have remained on a positive mode or have given a positive return. So first one is Bank Nifty. You might be seeing that whenever the fresh rally occurs, usually Bank Nifty has given a return of more than 13% in terms of indices. So Bank Nifty has generally major 4 banks has a 70% of the weightage. So private banks like HDFC and ICICI, and public sector bank like SBI, and after that private sector bank like Axis Bank has major weightage. Most few banks are there, but they have least weightage. So overall the Bank Nifty has performed a structural rally, still trading above their major support area. That's a high probability that once this dust gets settled, as of now the structure is intact and there is no major reversal or something like has been seen into Bank Nifty. So high chances that this rally is going to continue, and probably once the April quarter starts, this rally can be repeated, and it has the probability to move up to the mark of 72,000, which itself indicate a return on an index basis like 22%. So you can concentrate, if you are concentrating on Nifty 50, because Nifty 50 is a highly concentrated index. 36% of the weightage is into financial services. So majority, if the financial services are going to do, definitely Nifty is also going to participate with it. And if you are exclusively targeting a sectorial type of thing, one can look out Bank Nifty also. So after that, this is Nifty Financial Services. Over here, few financial services stocks has been added. So that structure is also intact as of now. Vis-a-vis the market, it is slightly into an consolidation mode. This is the monthly chart, but still doing better, at least than Nifty 50, and high chances that it is moving in a parallel zone, almost coming down. If it is coming down in the zone of 25,000, so that will be an ideal area to go long. Currently it is trading somewhere around 27,500. So if the market falls somewhere around more than 10%, this will also participate on the downward side. At that point of time, this index need to be relooked because it is moving in a parallel uptrend channel, and high chances that it may bottom out somewhere into the zone of 25,500 to 25,600. You can look out for specifically if you are an ETF investor type of thing, or doing SIP on a monthly basis. After that, we have Nifty India Consumption Index. So now Nifty India Consumption Index is basically a safer basket, specifically when the market is moving into an uncertain zone. So as you know that we are a country of 140 billion people, 1.4 billion people. So this is one of the index which has remained grossly, broader market reluctant trend type of thing, where despite of all the negative odds during the uncertain period, this index has a habit of holding your portfolio if you are holding the stocks which are associated with this index. So this index roughly is a type of hibernation zone type of thing. So during when we are expecting the market downtrend, at that point of time, majority of the mutual fund or fund manager usually shift to this type of index, specifically consumption and pharma, which are broader market fall reluctant. Chemical the nature of those type of things. So we are expecting this index on the lower end in case if it comes, as of now it is near support area. So if it comes around 10,000 type of level, it is one of the good index. You can watch out stocks like Medico or ITC, or there are very good stocks which has an potential to outperform the market in coming time period, or even in the present scenario also. If you are losing the money in some aggressive small cap or mid cap, this is one of the ETF you can watch out, and you can shift your money on a temporary basis so that at least you can have a lesser hit comparative to the market. After that, this is one of the darling post 2020, that is Nifty India Defense. You can see that is a minimal amount of correction and phenomenal amount of outperformance. It is strongly outperformed the broader market also, and majority of the index which are associated or listed on Nifty, on NSE as well as on BSE. So it has gotten good support around 72,000, currently trading as 81,000. In case if we are expecting that the market may come down around 22,000 type of level, this index also can give you a chance to enter into an ETF, or if you are people of buying good stocks during this period, so you can go ahead for this ETF also. Am I audible clearly, or is there any hiccups?
No, sir, you're audible.
Okay. After that, we have BSE Capital Goods. Now, BSE Capital Goods is a very broad term, and there are many stocks into it. Not necessary that they are purely into an capex type of mode. So this index has remained a grossly outperformer and not making new lows specifically, but the market is making lows. So as of now, it is trading around the zone of 68,000 type of thing, and we are expecting it to correct. L&T is one of the major weighted stock into this index, and you might be knowing that Larsen has phenomenally outperformed Nifty 50 as well as rest of the capital goods sector also. There are other stocks also which you can look out, stocks like specifically ABB as well as Siemens as well as Power Grid. So those type of stocks are also resilient to the current market fall, and has a good potential. Once the dust gets settled and market starts moving on the higher side, you can look out this specific ETF also. After that, we have healthcare. This is one of the index which has remained almost resilient to the current fall and trading almost near to its lifetime high. So this is basically associated with healthcare, that is pharma companies. So whenever they come out of their consolidation zone, they have an habit of moving up to 20%, currently moving into an extremely narrow zone due to the broader market condition. But majority of the stocks which are associated with this particular index is falling lesser vis-a-vis Nifty 50 as well as Nifty 500. So you can look out this index also. Stocks which are associated with this particular index like Lupin is there, Natco Pharma is there, Ipca Lab is there, are few of the stocks which are almost trading near to the lifetime high. So once this bad phase passes, this is one of the index which has a potential to outperform rest of the indices as well as the broader market. So you can either purchase an ETF, or if you find any viable stock which as of now trading near 52-week high and not falling with the market or trading near lifetime high, you can watch out. I am giving you a clue. Stocks like Lupin is there. So you need to identify that during this bad phase or after the fall of after making the high of 26,300, which are the stocks or which are the stock sector which are fallen lesser comparative to Nifty 50 or Nifty 500. So that will give you a lot of information about the sector rotation, that where the smart money is moving. So now we have seen that post September 2024, there was one sector which has been a talk of the town. So that was precious metals, specifically gold and silver. Okay, majority of the people as of now are still discussing them. So we are going to give you a brief outlook that from a purely technical perspective, how gold and silver are looking and probably how they are going to perform in coming time period. So during the uncertainty, specifically gold and silver are one of the pocket where smart money usually move. So post September 2024, we have seen that silver as well as gold has given a triple digit return type of thing. Are they going to continue their outperformance, or where they are headed? That is a question mark, and in the next few slides I am going to discuss it with you. So currently this is the chart of gold future on a weekly perspective. So the area which has been marked and numbers has been written are the consolidated consolidation phase, and once those consolidation correction phase gets over, you can see that how the rallies move. Now, metals or precious metals or commodities in general usually moves when fear comes. They are not like equity market, which moves on a hope of good news, like good earning, good policy, good sectorial outlook. So equity generally moves on hope about good things, while commodity has a habit of moving on a bad news like war or shortage of supply or something like that. So that's why the bull market in commodities is usually sharp and the rise is parabolic. चलता है तो मौका नहीं देता है चढ़ने का, and whenever they corrects, they usually moves down slowly, but whenever they corrects, they usually correct in the range of 30 to 40%. So it's extremely tough to time out commodities and ride the rallies. You need an extremely special type of mindset to trade commodities. But anyway, we're going to discuss it. So as of now, we can see that gold is trading above its majority of the moving average, and there is no trend reversal type of thing except one major correction which has occurred in the month of February. So what we are seeing is that seeing the outperformance and overheated participation, some amount of consolidation as well as lower end is expected into gold. Once again, it may move down into the zone of 1,35,000 to 1,40,000 and remain sideways for coming time period. The current high which you are seeing on the chart, which is roughly around above 1,73,000, at least for next 2 to 3 quarters, it seems that those highs surpass or new highs seems to be tougher to surpass and to make a new high. Second slide, which is of silver. So now, after a broad consolidation of roughly around, you can say 8 to 9 years, silver has given a parabolic move where after crossing the mark of 75,000, it has moved near to 4 lakh. Okay, so you can calculate that what amount of return it has given. As of now, it is trading. This is the weekly chart which you are seeing on your screen. The top which it has made above 4 lakh rupees. It also seems that in the near term it's tough to pass, and we are expecting comparatively higher correction than gold into silver. So in case if you are holding silver at this point of time, it will be prudent to switch over to gold, where in case of major correction, the lesser dent will come if you are holding gold rather than on silver. So we are expecting that there is a high probability that silver might react on the downward side and might correct up to 2 lakh to 2,28,000 before resuming its major uptrend. So this is the outlook of gold and silver, and by this I am concluding my presentation. Thank you very much.